another important announcement regarding taxation is that, okay, Finance Minister have made a proposal to remove DDT, Dividend Distribution Tax, okay. So the budget have announced to remove Dividend Distribution Tax and adopt a new system where dividend shall be taxed in the hands of the recipients, okay. So you know that dividend is paid by the company. Dividend is paid by the company to whom? Company to shareholder. So dividend is paid by the company to the shareholder based on company's profit, okay. And what happened is that to this dividend the company paid to the shareholder, government have imposed a tax, what is called as dividend distribution tax, and it is 50% of the profit. Plus there used to be cess and surcharge, and it used to come around 2.56% for the company. So other than the corporate tax, so this was a huge tax for the company. It have to pay corporate tax, it also have to pay dividend distribution tax. So it is a long request from the corporate and other major committees. Even the direct tax code panel also recommended to abolish dividend distribution tax. So now this dividend distribution tax, the company no need to, see earlier the company used to pay this tax. It is a direct tax, dividend distribution tax is a direct tax. Now company will not pay this tax. Rather the recipient, the shareholder will pay the tax. And how? Based on we have seen that the personal income tax regime, okay, each income tax holder will be coming under one tax slab or tax bracket. So which tax bracket he belongs to, based on that he have to pay the tax. Okay, so this is the new proposal the finance minister declared in this year's a very important announcement regarding taxation. Okay, so now the dividend will be taxed at the recipient, that is the shareholder, at what rate? The tax rate applicable to their income. Okay, so which tax bracket he comes under, that much percentage of tax he have to pay, because it will be coming under sources of, means income from other sources. Okay, he will have to show that, and companies will no longer be required to pay dividend distribution tax. Okay, so the tax of the company's burden will be now over. Dividend distribution tax will be over from the financial year 2020-21. Okay, so this is a very, very important announcement. So because of this announcement, UPSC can ask a question regarding dividend distribution tax. So you are supposed to know about this tax. It is a tax levied on dividends that a company pay to its shareholder out of its profit. Now, currently this year's budget have abolished this tax both at the company level and at the mutual fund level. Now the recipient only have to pay this tax. Earlier the distribution tax DDT used to be for the company used to be 15% plus cess and surcharge. Then net final tax burden used to be 20.56%. Now, so this company no need to pay tax, but recipient have to pay the tax. So how the company will do is, the company will deduct it. So before making any dividend, the company will deduct tax at the source. So TDS at 10%. Okay, tax will be deducted at 10%. TDS, that is tax deducted at source at 10%. If the dividend income is excess of rupees 5,000 per annum. Okay, so at TDS will be cut at 10%. So before giving the dividend to the shareholder, 10% TDS will be deducted before giving this dividend payment. Okay, and that's the condition is that if the dividend income is above 5,000 per annum. So these are the changes made regarding DDT in this year's budget. Similarly, this year's budget also have made some important announcement regarding tax concession for sovereign wealth fund. Okay, tax concession for sovereign wealth fund. One important decision is that there is 100% tax exemption. Okay, so a foreign investment by sovereign wealth fund. Okay, try to understand what is the sovereign wealth fund. Okay, so basically sovereign wealth fund are wealth fund by an institution mainly backed by a government. Okay, so for sovereign, only for sovereign wealth fund, if they are making any foreign investment in India, if a sovereign wealth fund, if they are making any foreign investment in India, there will be 100% tax exemption to the, so sovereign wealth fund, their interest they earn, the dividend they get, capital gain they make, to all these, that is to the interest, dividend and capital gain, a foreign investment by a sovereign wealth fund will be tax exempted if they are making the investment in infrastructure and other priority sectors. Okay, condition. Okay, if a sovereign wealth fund is making investment in infrastructure and other priority sector, for their interest they earn, the income or the dividend they earn, as well as the capital gain they make, the 100% tax exemption will be there till the investment they made before March 2024. Okay, so all the investment made by the sovereign wealth fund in infrastructure and other priority sector before March 2024 will be 100% tax exempted, and but with the condition that they should go for this investment should go for a lock-in period of 3 years. They should at least make that investment, they locked in India for 3 years by the sovereign wealth funds of foreign government. This can also be a potential question. The condition is 3-year lock-in period, investment has to be in infrastructure and other priority sector, and if they are making the investment prior to March 2024, their 100% tax exemption will be there. Very important announcement made in the budget to promote foreign investment by sovereign wealth fund.